Hi, this is Acme with the Bulletin Board Heroes weekend edition for Saturday, the 4th of November. Starting off with the FTSE 100, which didn't manage to get too near to the 50-day moving average of 75.12 before falling back again. And now we're in a range between, 7,300 and 74.70. The view at the moment is that we need to get back above at least 74.30, which was that late October peak, to then be looking to the upside. Otherwise, there's that main 7,300 area to worry about. Moving along to the DAX, and here, picture still dominated by that bear trap island reversal, so gapping down during October and gapping up to start November. So still going with the positive in the sense that while we're above that gap and 15,000, we could still get up to retesting the post-October resistance of 15,500. RSI is pushed above neutral 50, which is a positive. But the key here is staying above that 15,000 level. Moving on to the Dow, which obviously had the non-farm payrolls to blur the picture. Here you can see that we actually gapped up through the 50-day moving average, which is quite a strange and wonderful thing to do. But that's the second gap higher this month, so very strong pattern there. And we're just really looking for this market to get through 34,100 on an end-of-day close to take us up to possibly up to 35,000. By the end of this month. But the key here, staying above the first gap there around 33,500, that would be the clue to the whole market heading higher. We obviously had that bullish divergence starting the month or going into November, and that's why we've got two gaps to the upside. Moving along to Bitcoin, where everything is hinging on this market consolidating at the higher levels and then hopefully going to a fresh peak. In this case, it would be up to 43,000, and that 1-year resistance line projection, the black line there. Otherwise, on the downside, we're hoping that this market will stay above 32,100. The July resistance there, backed by the rising 50 and 200-day lines, which had a golden cross just at the end of last month. Going on to the stocks, and quite an esoteric selection, I think, today. A few new names and faces, at least in the near term, starting off with Audioboom, which delivered on Thursday's promise to end the week. Here we closed, I suppose, right on that line there, around £1.73 was on Thursday, and so we closed just above that to end the week, which is a positive, above the resistance line there from back in July. We're looking for £2.60 perhaps as soon as the end of next month. Obviously, we want to stay above the 50-day line there on £1.59. And then ideally head to the higher levels, which would fill that gap, or part of the gap, down from back in June. Onto a stock which hasn't had a great year so far, and hopefully things will improve. Looking at the technicals at the moment, just looks as though there is some sign of recovery. A strong day on Friday to end the week. And we'd like to see the shares back above the 50-day moving average at 1.5 pence. Maybe don't want to be back below the 1.1 pence area, the recent October support there for the shares. On to Capital Metals, which also delivered well after being included in Thursday's Bulletin Board Heroes. Here we saw the shares head up through 4.5 pence. They closed just above that resistance line there from back in November last year. Want to see more price action at 3.9 pence or above, so we can get our retest of 5.5 pence. Best case is we'll be up to 7 pence by the end of this month, and ideally we stay above, or stay on the right side of 3 pence while we are doing it. I know that a lot of people are willing Contango to go higher, and let's see whether the shares can deliver the goods. Here it's actually a setup which looks rather like the Capital Metals setup that there was back on Thursday. We had a gap close buy signal, so the gap down at the end of October on Tuesday, and then on Thursday the shares closing that gap, so the gap close buy signal, and obviously that worked for the shares. Initial target here to retest the October resistance around 5.3 pence. Best case is that we get up to 6.6 pence, maybe as soon as the end of this month, if we can stay on the right side of the 50-day line, and 4 pence. On to one of this week's big rises, which was Cadence, direct buying helping the cause. Here we had a bear trap rebound from below the 50-day line around 6.6 pence. And above that, we're looking for at least a retest of the recent 8 pence resistance for the shares, hopefully in the next week or two. Best case by the end of the year, i.e. by the end of December, up to 12 pence, and the top of that broadening triangle there from back in April. A bit of a stir in eco buildings, and here we can see that the shares have made a base around the 15 pence level, and above that we're looking for at least an initial target here up to 23 pence. That would snap the downturn in the shares that we've seen since May. But a bear trap there from below the old October support there around 17 and a quarter pence. So above that, looking for 23 on eco buildings, maybe the start of a turnaround for the shares. The stock which I don't think I've looked at before is Funding Circle, and here obviously not blessed with the big liquidity here, but we have had a bear trap island reversal, so we gapped down late in October and gapped up to start November. We also closed above the 50-day moving average there at 39 pence. Looking for the shares to get back into the mid-40s maybe over the next couple of weeks with a fair wind behind them. They're also backed by bullish divergence, so lower lows for the end of October, but higher RSI trace, so maybe there's a bit of momentum there. If you're a fan of the shares and looking for greater glories, then it would be a move towards the top of that broadening triangle there from back in August, heading for the 50 pence area and the 200-day moving average. The stock that bounced well on Friday was Global Petroleum, and I think that was backed by stake building, and let's see whether the shares can go a bit further this week. Looking for a move towards the gap there. There's a gap there on the chart at 0.11 pence, and that would maybe be a reasonable target for the end of this month if the shares can stay on the right side of 0.05, which is was the Friday support zone. Guild Sports also looking more chirpy of late. You can see that the shares have broken above a now rising 50-day moving average. We had an unfilled gap to the upside, so the bear trap gap reversal and bullish divergence backing it. So we've got all the right charting furniture in there above the 50-day line at 0.458. We're looking for the shares to hit the top of that falling trend channel from back in April, and the 200-day line at 0.77 pence. Moving on to a stock which I was looking at on Friday, but decided to give it a miss. Maybe I should have been more brave, but here you can see that Horizonte is broken out of this triangle that's been in place since October. Difficult to see exactly where all the numbers and lines are, but 18 pence is the level of the resistance line there, and above that we're looking for the shares to maybe get back into the upper 20s where they were at the beginning of last month. That would be at least the beginning of some relief for the shareholders who obviously took a bit of a hit last month on that stock. I want to see the shares remain above 18 pence in the meantime. On to MC Mining, and here a nice break of I suppose the wedge broke a little, well, in September, but then we fell back again. Here we've got the wedge break at around the 8 pence level, and above that looking for 12 pence by the end of this month, hopefully breaking the main 9 to 10 pence resistance for the shares over the next week or so, and backed by bullish divergence, a bullish divergence line there from back in September. Orosur doing rather better than it has done for quite some time. Here we've got a nice turnaround here, breaking the 50-day line at 2.6 pence, little bull flag breakout there on Friday as well. Above that 50-day line and neckline resistance around the 2.5 pence zone, looking for as high as 4.5 pence by the end of this month. That would take the shares back to where they were back in May and quite near to the 200-day moving average. So that is something to keep an eye on. Finishing off with the last two. First one is Physiomics, which looks as though it's threatening to revisit September highs around the 3 pence level. We had an end of day and an end of week close above the rising 50-day line at 1.75 pence. The more we can spend time above that 50-day line, the greater the chance of a retest of the 3 pence area over the next few weeks. Haven't looked at Xeros for ages, and here you can see we've got a strange pattern here, bullish divergence, which is helping. That's the line there from back in August, so that's backing the turnaround. Unfilled gap to the upside off the low after a sideways shuffle at the low, so that is quite encouraging. Just looking for an end of day close through 2.5 pence and that July resistance line to maybe take the shares up towards the 200-day moving average area at 3.5 pence by the end of this month. That's it from me today. More updates during the week.